Let's begin with a clear and direct update so everyone understands where things stand right now. As February 2026 begins, millions of seniors across the United States are paying close attention to payment schedules connected to the IRS, Social Security, and other federal benefit programs. There has been renewed discussion around stimulus-style relief, tax credits, refund timing, and how these payments interact with monthly retirement income. Many older adults are hearing different claims from television, social media, and word of mouth, and it can be difficult to know what is officially confirmed and what is still under discussion. This update is meant to explain what is happening in a calm and practical way, focusing on what seniors need to know about February 2026 payments, who receives money first, and how the IRS payment system works alongside Social Security and other benefits. To understand the February 2026 stimulus schedule, it is important to first understand how the IRS handles payments in general. The IRS is responsible for issuing tax refunds, processing certain refundable credits, and distributing any congressionally approved relief payments that are tied to tax records. Unlike Social Security, which follows a fixed monthly calendar based on birthdays, IRS payments depend on processing order, filing status, income verification, and method of delivery. This is why some people receive money earlier than others, even when the payment amount is the same. For seniors, this distinction matters because many rely on predictable income to cover rent, food, utilities, and medical costs. In early 2026, the IRS continues to process payments connected to refundable tax credits, delayed adjustments from prior filings, and approved relief measures that function similarly to stimulus payments. These payments are not automatic for everyone at the same time. Instead, they are released in waves, beginning with individuals who meet specific criteria and whose information is already verified in the system. Seniors who file taxes regularly, use direct deposit, and have no unresolved issues on their accounts are typically among the first to receive IRS-issued funds. February is an especially important month because it falls after the initial January processing surge. By this point, the IRS has already completed a large portion of early season verifications. This allows the agency to begin releasing payments more consistently. For retirees and older adults, February payments often include refunds, credit adjustments, and in some cases, supplemental relief tied to income thresholds. These funds are separate from monthly Social Security checks, but they can arrive close together, which sometimes causes confusion. One of the most common misunderstandings among seniors is the belief that the IRS controls Social Security payments. This is not the case. Social Security benefits are managed by a different agency and follow their own schedule. However, the IRS does play a role when it comes to tax withholding, recovery credits, and any stimulus-style payments that are issued through the tax system. This overlap is why people often hear the word stimulus used in conversations about February payments, even when the money is technically issued as a tax-related credit or adjustment. For February 2026, the first group to receive IRS-related payments typically includes individuals who filed their most recent tax return electronically, selected direct deposit, and had no changes in income, address, or banking information. Many seniors fall into this category, especially those who use the same bank account year after year and receive Social Security through direct deposit. When IRS systems can match information quickly, payments move faster through processing. Another group that often receives payments early includes seniors with very low or fixed incomes who qualify for refundable credits. These credits are designed to support individuals whose tax liability is minimal but who still meet eligibility rules. In these cases, the IRS does not need to wait for extensive reconciliation because income sources such as Social Security are already documented. This allows February payments to move forward without long delays. It is also important to understand that February payments do not always arrive on the same date for everyone. For retirees who also receive pensions, February IRS payments are generally independent of pension income. Pensions are managed by employers or pension administrators and follow their own schedules. However, pension income does affect tax calculations, which can influence refund amounts. Seniors who had taxes withheld from pension checks may see refunds in February if withholding exceeded their final tax liability. Healthcare costs also play a role in February payments for some seniors. Medical expenses, insurance premiums, and related deductions can affect tax outcomes. When these factors are properly reported, they can increase refunds or credits. Seniors who had high medical expenses in the previous year may notice larger IRS payments as a result, even if their income remained the same. Another important topic is how February IRS payments interact with monthly budgets. For many older adults, a February deposit can provide temporary relief, allowing them to catch up on bills or rebuild savings after the holidays. However, it is important to remember that these payments are not always recurring. Planning ahead and understanding whether the payment is a one-time adjustment or part of a larger pattern is essential for financial stability. As February progresses, additional groups begin to receive payments. These include individuals whose returns required manual review, seniors who filed later, and those whose information needed updates. While these payments may arrive later in the month, they are still part of the same overall schedule. Patience is often necessary, especially for those outside the earliest processing group. Throughout this period, rumors and misinformation tend to increase. Seniors may hear claims about guaranteed checks, exact dates, or automatic increases that are not officially confirmed. This is why it is important to rely on clear explanations and verified processes rather than speculation. The IRS operates based on established rules and procedures, and while changes do occur, they follow formal approval and implementation steps. As we move deeper into February 2026, understanding who gets paid first helps reduce anxiety and uncertainty. Early payments generally go to those with the simplest, most up-to-date records and electronic delivery methods. Later payments go to those requiring additional review or paper processing. Both groups are part of the same system, and delays do not automatically signal a problem. As February 2026 continues, many seniors begin to notice how IRS-related payments overlap with their regular benefit income. This overlap can sometimes make the month feel financially confusing, especially when deposits arrive close together or out of sequence. Understanding how these systems operate side by side helps older adults avoid unnecessary worry and plan their expenses more confidently. The IRS and Social Security operate independently, but because both rely on federal banking systems, their payments often appear within the same general time frame. Social Security benefits in February follow the standard monthly schedule based on birth dates. These payments are predictable and do not change because of IRS activity. However, when an IRS payment arrives around the same time, it can feel like a combined or special deposit, even though the sources are separate. For seniors who receive SSI or SSDI, February payments may arrive earlier in the month, which further adds to the sense that multiple payments are connected. In reality, each payment follows its own rules and timeline. For older adults receiving SSI, February is often a month of close attention because payment timing can shift slightly depending on weekends and federal processing days. While SSI is not issued by the IRS, tax-related payments can arrive around the same time. This overlap does not affect eligibility or future benefit amounts, but it is important for seniors to understand that one payment does not replace or reduce the other. SSDI recipients experience a similar situation. Their benefits are scheduled independently, but IRS deposits may appear before or after SSDI payments without any connection between the two. Seniors sometimes worry that receiving IRS money could change their benefit status. In most cases, IRS refunds or credits do not count as income for benefit purposes. This distinction is important because it reassures seniors that receiving a February payment from the IRS does not automatically trigger a reduction in Social Security-based benefits. Another area of concern for many retirees is taxation. February IRS payments often prompt questions about whether the money is taxable. Refunds are generally not taxable because they represent a return of overpaid taxes. Refundable credits and adjustments are also typically non-taxable. However, pension income and Social Security benefits may still be subject to taxation depending on total annual income. Understanding this difference helps seniors avoid confusion when reviewing their finances later in the year. Many seniors also receive survivor benefits or spousal benefits, which follow the same Social Security schedule as retirement benefits. These payments are not affected by IRS activity. When an IRS payment arrives, it is separate and should be treated as a one-time or occasional adjustment rather than a permanent increase in monthly income. This understanding helps prevent budgeting mistakes that could cause financial strain later. As February moves toward its later weeks, a second and third wave of IRS payments is often released. These include individuals whose returns required additional review, those who updated banking information, and those whose filings were processed after the initial surge. Seniors in this group may feel anxious when others receive payments first. It is important to remember that timing differences are normal and do not indicate a loss of eligibility. Paper checks, when issued, usually appear toward the end of the month or even into early March. Seniors who rely on mailed payments should plan accordingly and avoid assuming a payment is missing simply because it has not arrived yet. Postal delivery times vary, and federal processing does not guarantee identical arrival dates for all recipients. Another important topic for seniors is how February payments relate to budgeting and financial planning. Unexpected deposits can be helpful, but they should be handled carefully. Using these funds to address overdue bills, medical costs, or essential expenses often provides the greatest long-term benefit. Seniors are encouraged to view February IRS payments as supplemental support rather than a replacement for regular income. Healthcare expenses remain one of the largest financial pressures for older adults. February payments sometimes allow seniors to catch up on prescription costs, insurance premiums, or medical appointments that were delayed. While these payments may provide relief, they do not change ongoing healthcare expenses. Planning for future costs remains essential. Housing and utility expenses are another area where February payments can make a difference. Winter months often bring higher heating costs, and many seniors face increased utility bills. A February IRS deposit can help cover these expenses, reducing stress and preventing service interruptions. Understanding the timing of payments allows seniors to plan bill payments more effectively. Food costs have also risen in recent years, placing additional pressure on fixed incomes. February payments may allow seniors to restock essentials or improve their diet temporarily. However, these funds are not guaranteed every month, which makes long-term planning especially important. For seniors who assist family members financially, February payments can sometimes create expectations from others. It is important for older adults to prioritize their own needs first. These payments are intended to support the recipient, not to create new obligations or financial pressure. Throughout February 2026, clear information remains the most valuable tool for seniors. Misinformation spreads quickly, especially during times of financial uncertainty. Claims about guaranteed stimulus checks, automatic increases, or exact payment dates often circulate without confirmation. Understanding how the IRS payment system actually works helps seniors remain grounded and confident. As the month concludes, most eligible IRS payments for February are completed or scheduled. Seniors who have not received funds by the end of the month may still be in processing or awaiting mail delivery. In many cases, patience is the only requirement. Federal systems move methodically, not emotionally, and delays do not mean denial. Looking ahead, seniors should view February 2026 as part of a broader financial picture rather than a single defining moment. IRS payments, Social Security benefits, pensions, and personal savings all work together to support financial stability. Understanding how each piece fits reduces anxiety and improves decision-making. In closing, February 2026 highlights the importance of clarity, preparation, and realistic expectations for seniors. IRS payments arrive in stages, with those having the simplest and most up-to-date records receiving funds first. Social Security and other benefits continue on their established schedules, unaffected by IRS activity. By understanding how these systems operate, older adults can better manage their finances, avoid unnecessary stress, and make informed choices that protect their independence and security. Staying informed and calm is one of the most powerful financial tools available, especially in times of uncertainty.